March 18th, 2020. Billionaire hedge fund manager Bill Ackman calls into CNBC in a complete panic.
What would the president be asking the American people to do? He's not saying, he's not saying to storm the beaches at Normandy, right? He's saying, go home.
The infamous "Hell is Coming" interview shocks the markets. It appears that Ackman was distraught, crying over the fact that the country and the world were falling apart right in front of our eyes. But as time went on, we discovered some facts that made us rethink Bill's motivations. Turns out Ackman wasn't crying because he felt bad. He was crying because he couldn't believe how much money he just made off his puts. Puts that he bought weeks before his interview, resulting in a $2.7 billion gain from a small $27 million investment. Many questioned his integrity and motivations for pushing panic while holding bets that would profit off the panic itself. Now, nearly a year later, Bill is in the spotlight again for something similar. A prediction that, if right, could spell the beginning of the end for the US markets. In a confusing set of tweets, Ackman had the following to say about the Federal Reserve. He claims he gave a presentation to the Federal Reserve Bank of New York in order to share his views on inflation and Fed policy. The summary of this presentation was that Bill and his team think the Fed should taper immediately and begin raising rates as soon as possible. Now think about this for a second. Why would a hedge fund manager who owns mostly equities want the Fed to taper? We've discussed this on this channel many times. Tapering would be the right thing to do, but it would also mean that the stock market would take a massive nosedive. Of course, it's hard to imagine that a billionaire hedge fund manager would, quote, do the right thing by ignoring his interests and pushing forth a policy that would ultimately result in heavy losses for him and his clients. 10 minutes later, Bill tweeted what we all suspected. He was in fact short, claiming that, quote, as we have previously disclosed, we have put our money where our mouth is in hedging our exposure to an upward move in rates, as we believe that a rise in rates could negatively impact our long-only equity portfolio. That's a nice way of saying, I'll make a ton of money if the Fed tapers. This calls into question the integrity of the Federal Reserve as well. Why are they even taking a meeting with a hedge fund manager who has a vested interest in pushing a certain policy? That would be like Bill Belichick presenting to the NFL leadership why his team should only play at home. An outrageous proposal that, in my opinion, is a massive conflict of interest. Now, to be fair, not everything about this proposal is bad. Ackman has made his strategy clear for 2022. It's one that will make money either way the market goes. If you listen to his latest interview, his strategy is simple yet effective. And it's one you can replicate for your own good. Oftentimes in the comments, there are many who ask how to protect themselves against this threat of high inflation. And here it is.
The emphasis of our strategy is owning these, what I call super durable, undisruptible companies, right? People are going to be ordering pizza and having it delivered, and they're going to eat it. And if for $8, you can feed a family of four with a pizza pie. That's a pretty good proposition. And you get it delivered in 28 minutes by a smiling person who comes in a box and keeps it warm. That's going to continue. Hilton. Hilton's stock was down the most, I think, of anything we owned when the pandemic was announced. We meaningfully increased our position in the company in the mid-50s. Stock today is 140. So when you own businesses that have very, very attractive economic characteristics, and they're largely not immune on a day-to-day basis, but they're protected from interest rates moving up or down or commodity prices moving up or down. I think that maybe the single most important characteristic today is going to be pricing power. If the cost of your inputs go up, you better be able to raise price and not lose the customer. And that is true for every one of our companies.
So there you have Ackman essentially saying that the correct way to navigate the markets in the future is to own companies that have pricing power, businesses that people will use no matter what. Even with inflation booming, I agree with Bill that individuals will continue ordering pizzas and Chipotle. Ask yourself the question, would you stop eating your chicken bowl if they raised the price by 10%? Sure, you may be upset for a week or two, but I truly believe most people would continue to buy. But this is not the full picture. There is something Bill will not say publicly. It's very likely that his preferred scenario is that the Fed raises rates quickly. This would crash the markets, including the stocks he talked about, but it will also make him a ton of money on the various interest rate hedges he has as well. If this played out to his plan, he would then sell those hedges, taking the profits to buy up the beaten down stocks. Ultimately, we know that the Fed would push rates back to zero if a recession was threatened. And again, Bill, just as he did in the infamous 2020 short, would make money from the fall and the eventual rise. Don't forget that while he was shouting "Hell is Coming" on CNBC, he was exiting his short position and buying up Hilton stock in the 50s. Hilton is now 140. This was a strategy we've seen before. This interview from March 18th, 2020 showcases exactly this. He shouts over and over again that Hilton stock is going to zero. But listen to what happens halfway through the interview. It's quite an amazing clip. These guys know exactly how to play the game with the media.
Now, take a look at Hilton stock. We're a major shareholder of Hilton. Hilton is the canary in the coal mine. This is an incredibly well-capitalized, amazing, dominant global company that actually doesn't own many hotels. It just collects royalties, down from like 120 to 50. Okay, it's going to zero. Okay, along with every other hotel company in the world. Park Hotels and Resorts. This, stock's down from 33 to 4. This is a spin-off from Hilton. Why is it down from 33 to 4? Because every hotel is going to be shut down in the country. Everyone.
Hang on just 1 second. You say Hilton is going to zero? I mean...
Oh, no, again, I'm a major shareholder. What I'm saying is if we allow this to continue the way we allow it to continue, okay, every hotel company in the world, okay, is done. Okay, because no business can survive a period of 18 months without revenue. Okay, and stick with me, and that's what happens, okay, if you operate the way we're operating now, okay? Now, let me give you, so that's a very, very bearish thought, okay? And I've been super bearish, but I got bullish, okay? And the reason why I got bullish, and I've been aggressively buying stocks, including Hilton, today, okay? And I've been buying all the way down, Hilton, restaurant brands, Starbucks, walk your way through the only stocks I'm not buying are companies who are on the board and I'm restricted.
So that should confirm your suspicions. The strategy is simple. Buy a short hedge, start a panic, sell the short hedge, and buy up the beaten down stock. Profit on both ends. This is exactly why Ackman's firm Perishing Square was able to post a 58% return in 2019 and a 71% return in 2020. I hope this video serves as proof that whatever you hear in the media from someone who manages other people's money is likely not their actual opinion, but rather an agenda-based push to serve their own interests. Raising rates may be the correct thing to do, but pushing the Federal Reserve to do it only after you have secured a short position seems a little outrageous to me. Let me know what you guys think in the comments below. As always, thank you for watching. Please don't forget to hit that subscribe button and check out my new channel in the description below.